I'm Owen Bigland. This is the Inside Edge video blog. Okay, let's do a video blog here on the catalysts for the Vancouver real estate market, lower mainland market to stay strong and to see prices continuing to rise, which is what's been happening here for the last year. Condo market, I gave you guys the stats a couple of weeks ago. Month over month, prices are going up in all categories here. Will it continue? I don't know. Who knows? As you guys know, I don't get into short-term speculating on what the real estate market will do or even the stock market in the short term because nobody knows. Market could take a turn here this summer and go down 5 or 10% in real estate. Stock market could go up 10 or 15% between now and the end of the year. It wouldn't surprise me if the stock market goes down 10 or 15% before the end of the year. Who knows? Who cares? What I've often said here is just buy quality assets, good quality real estate, whether that's a detached home in Renfrew or Grandview or Kitts or a condo in Yaletown or a condo in the West End or in Richmond on SkyTrain, and buy your principal residence and just keep the damn thing. Because in the long term, that I always make my predictions on. In the long term, Vancouver real estate is going to do very well for you. You are going to make boatloads of capital gains over the next 10, 15, 20, 30 years. Just like if you buy good, high quality US and Canadian equities, or just simply buy the index, the S&P 500 or the Triple Q or the VIG, and hang on to it for 20 or 30 years, you are going to make a pile of capital gains guaranteed. But in the short term, anything can happen. But in the media, of course, all I see in the media, for the most part, 90% is, of course, negative. All the reasons why the Vancouver real estate market is in a bubble, is going to go down, why the stock market is going to crash. 90% of the stuff you see is on the negative side. You rarely see any of the catalysts for the market to continue going up. So let's do one here, kind of some catalysts that might cause the Vancouver real estate market to stay fairly strong here over the next year or two. First one is low interest rates. Well, interest rates are very near historic rock bottom lows right now. We are, may start seeing some 10, 15, 20 basis point increases here moving through the summer into the fall. But make no bones about it, interest rates are going to remain low here for some time to come. I'm not a mortgage analyst, but the guys that I do follow tell me that we're going to probably be in a low rate environment for some time to come. The other thing, of course, that I've often talked about, if you think rates are going to go up, if you're on a fixed rate mortgage or a variable rate mortgage, don't forget you can always lock in something for 5 years. Now you're good at that set rate for 5 years. But I think we're going to be in a low interest rate environment for at least the foreseeable future, next 2 or 3 years. After that, who knows? Inflation. Well, I did a couple of blogs on this in the past. Inflation, the cost of building materials, wood, glass, steel, rebar, concrete, labor is all going up. I don't think a lot of that has yet to be reflected in the prices. It will. There's always a delay there. Although lately in the Wall Street Journal and Barron's, I've been reading that this inflation might be transitory. COVID is, we're opening up now. Some of these guys that I follow, some of these economists, even though I said before economists are just guessing at it anyways, they're guessing at everything. That's why I say who cares in the short term, just focus on the long term. But some people are saying maybe this inflation is not going to be here to stay. It might be through until spring of next year, and then we'll get back to normal inflation rates of maybe 2%. We'll see. But for right now, inflation is running at close to 4.5. A lot of building materials and things like that are up far more than that. This may not be reflected yet in the prices, but it will on new builds as well as tangible product. COVID reopening, well, we're now heading into late June, early July. Things are looking a lot brighter now. More vaccines in the US now. They're pretty much fully opened. Parts of Europe. It looks like, I don't know about you guys. As I speak now, I've had my first shot, but I'm expecting to get my second shot here and be fully vaccinated by the middle of July. That's going to eventually open up the borders again. We're going to start to see immigration starting to come back into the city. We're going to start to see students coming back in. We're going to start to see contract workers demand for rental accommodations, both furnished and unfurnished, those are going to go up. Airbnbs, all that stuff. That will all put upward pressure on real estate prices. So remember, I've been talking for a while about the coiled spring effect. And that's kind of the early stages now of what's starting to happen. Give you a couple of things from the front lines here. I am seeing now land assemblies starting to close again. So remember, I did a blog back a little over a year ago, even just before COVID. And I had said, because of the NDP government and all their taxes and bureaucracy, as well as the city of Vancouver, developers were getting a little skittish. They were not buying land assemblies and unit assemblies. They were not building. And COVID, was kind of a nail in the coffin there. Everything stopped. Well, I can tell you now that I had a couple of clients now. I didn't sell them these homes, but they were involved in land assembly a couple of years ago. They were taken off the market. They were put back on later this spring, and 2 of them have now sold. These are in the Renfrew, and one is in the Grandview Woodlands area. Fairly, full block land assemblies. One is going to be a 3-story wood frame condo. The other development is pretty much an entire block, is going to be townhomes in Grandview. So that's always a positive sign that things have turned here. I'm also seeing some activity in the unit assemblies as well, where stratas are kind of doing some research now. Developers have approached some of these stratas with the idea of buying out the entire strata. Now, again, these are tough to do. They take a long time. I've talked about these. I know of one down here downtown that's been for sale for probably 6 or 7 years now, and they're no closer to a deal now than they were 6 or 7 years ago. You need to get, an 80% vote now, and even then, you've got to go through, get it approved by a judge. There's always some holdouts. Even when the deal goes through, it can still be years and years before it goes through City Hall, gets the permits for the density, and they actually put a shovel in the ground. But I am seeing unit assembly activity increasing here. It was all but dead for the last year. Rental building sales. That market, when a rental building does come up for sale, maybe a 40 or 50 wood frame building in the West End or Mount Pleasant, that market now is from what I hear, is quite strong. Very little for sale, and when they do go to market, they are getting bought pretty quick. So if you've been watching the news in Canada, as this has been going on in the States, you're starting to see some large institutional hedge funds, private equity funds, large institutional investors buying up real estate. It started in the States, but there was just an article about a week ago on a large company that's forming here to purchase single-family homes in the Ontario and Quebec area. And the plan is to buy up these homes. Apparently their budget is $1 billion, and then turn these into rental homes. I don't think you're going to see too much of that in Vancouver. They're kind of up in arms about this in a lot of cities in the States, like Arizona, Texas, some parts of California. This has been going on for a while. These large institutional investors like Blackstone are buying up swaths of detached homes. And, I don't know. I don't think you're going to see that in the Lower Mainland here with our prices, but it should be a message to people when you start to see unit assemblies going back on again and selling, land assemblies. You start to see talk renewed interest in unit assemblies by developers. You start to see these large institutional investors buying swaths of detached homes in the States and now coming to Canada. These are all catalysts that should be, a sign that real estate looks pretty buoyant here. It looks like it's going to stay fairly strong, at least for the next short while anyways. But again, trying to predict where market's going to go this month or next month or 6 months from year from now or a year from now really is pretty futile. Again, what I've often pounded home here on my blog is just stick with the long-term fundamentals of buying and holding real estate. Buy your principal residence sooner rather than later. You need a roof over your head. Take advantage of the principal residence exemption. Take advantage of these record low interest rates. Take advantage of the leverage. because it's the Tina effect. There is no alternative. The alternative is to wade into the ugly rental market in Vancouver and the Lower Mainland, which is a tough market to be in. I've done many blogs on renting long term. Fine in the short term, devastating financially in the long term. Anyone that tries to tell you otherwise is not giving you the straight goods. Not only financially, but the intangibles of owning real estate long term. But focus on what real estate will do for you 10, 15, 20, 30 years. Don't try and time markets. You're not going to do it. You're not that smart on what the market will do 6 months from now or a year from now. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.